What happens when the world's most indebted superpower demands its closest ally sabotage its economy or else? That question just got answered. This week, Washington told Tokyo, "Crash your economy or we'll do it for you." Japan said no. Now the US is staring down the barrel of a failed $22 billion bond auction. Spoiler: the world's not buying what America's selling anymore. Behind the scenes, Japan is struggling. Toyota lost $1.3 billion in just 2 months. The nation's GDP is shrinking and its economy is on the edge of recession. So what does the US demand? That Japan raise interest rates, knowing full well it could explode Japan's bond market. With a debt-to-GDP ratio of 261%, the highest in the developed world, higher borrowing costs would be catastrophic. Why would the US push for this? Because it wants to weaken the yen, so American exports look cheaper in comparison. It's not diplomacy, it's economic blackmail. Instead of giving in, Japan is fighting back. Bank of Japan Governor Kazuo warned that domestic consumption is already weakening. March 2025, spending dropped year over year. Hiking rates now would hit Japanese households hard. And even if Japan did it, the results would be ruinous. Deutsche Bank estimates Japan would need a 20 to 25% yen appreciation to satisfy US trade demands, a move that would devastate exports already battered by Trump's 24% auto tariffs. Toyota expects a 20% earnings decline and a trillion yen loss in operating income. Meanwhile, Washington's economic team, Treasury Secretary Scott Bessent, Commerce Secretary Howard Lutnick, and Trade Rep Jameson Greer, is reportedly in disarray. Bloomberg reports that negotiations have stalled due to internal conflict. Japanese officials say the U.S. changes its position with every meeting. This isn't serious diplomacy. It's theater aimed at impressing Trump's political base. The upcoming Treasury bond auction isn't routine. It's a referendum on U.S. economic credibility. And early signs point to disaster. 2 months ago, domestic buyers slashed their participation to 14%. Foreign demand dropped 31%, led by massive sell-offs from Japanese pension funds. These funds aren't just trimming, they're fleeing, shifting into euro-denominated infrastructure bonds to escape dollar volatility. Yields on 30-year treasuries have spiked to 5.12%, the highest since 2011. Traders call it a silent boycott. Why? Because inflation expectations have jumped to 3.1%, well above the Fed's 2% target. With deficits ballooning under Trump's stimulus plans, locking in 5% yields just doesn't add up when inflation eats most of it. It's not just a numbers issue, it's a trust issue. Washington wants to reshore production and cut reliance on global supply chains, while still depending on foreign capital to fund its exploding debt. The Peterson Institute calls this an economic paradox. You can't do both. Japan sees this and is moving accordingly. Japan isn't begging for relief, it's building alternatives. Exports through the CPTPP, Comprehensive and Progressive Trans-Pacific Partnership, jumped 13.4% in Q1 2025. Toyota and Honda are boosting production in Mexico and Canada to dodge U.S. tariffs. Mitsubishi Materials is securing rare earth supplies through Vietnam and Australia. More dangerously for U.S. dominance, Japan is considering opening CPTPP membership to both China and Taiwan. That's not just economic realignment, it's a strategic shockwave. If Japan builds a Pacific trade bloc including China, Canada, Mexico, Australia, and Taiwan, the U.S. becomes economically isolated in its own backyard. Japan is also rejecting U.S. monetary pressure. The Bank of Japan is delaying its bond tapering after domestic yields surged. Their economists, 68% of them, according to a recent Reuters poll, oppose interest rate hikes until U.S. trade policies stabilize. And it's not just policy, it's capital flight. Japanese pension funds are pulling money out of U.S. bonds and moving it into European infrastructure. Signals that the dollar is no longer seen as a safe long-term store of value. And when Japan moves, others follow. The U.S. is running a current account deficit of 3.8% of GDP and needs constant foreign inflows just to keep the dollar afloat. Trump's tax cuts are projected to add 2.4 to 2.6 trillion to the deficit over the next decade. The CBO warns debt to GDP could top 121% by 2033. So, at the exact moment America needs its allies to fund record debt levels, it's telling them to destroy their own economies to help U.S. trade figures. That's not how alliances or economics work. Despite this, Treasury Secretary Bessent insists U.S. bonds are still the world's safest asset, but markets don't agree. Foreign institutions cutting participation in Treasury auctions by 31% isn't a fluke. It's a confidence collapse. And the math no longer works. With high inflation and runaway deficits, investors are no longer buying in. The $22 billion bond auction will show whether global markets still believe in America's fiscal responsibility. If it fails, if demand craters, it sends a clear message. The U.S. debt model is no longer credible. For decades, Japan played its part, buying U.S. debt, propping up the dollar, supporting American monetary policy, even at its own expense. But this time, Washington crossed a line. Demanding Japan crash its economy to prop up American trade stats? That's not partnership, that's abuse. And Japan is done playing along. Ironically, America's strong-arm tactics are accelerating the very outcome it fears most, a multipolar world where the dollar is optional. While Washington bullies, Japan is building. If CPTPP expands to include China and Taiwan, the world's second, third, and fourth largest economies would be tied into a trade bloc with zero reliance on U.S. approval. It's not theoretical. Exports are rising, supply chains are shifting, and dollar-free trade systems are taking shape in real time. And when this bond auction goes live, if foreign demand crashes and Japanese funds continue their exit, the U.S. will face a brutal choice. Raise interest rates drastically to attract buyers, risking recession. Let the dollar collapse, risking inflation and lowered living standards. Either path is economic pain. Meanwhile, Japan is building a model that can thrive with or without the U.S. Trade ties, financing, supply chains, and all. For the first time since World War II, the power balance has flipped. Japan now has leverage over America. If Japan succeeds, others will follow. South Korea could join CPTPP. European investors may follow Japan into euro-denominated assets. America's entire post-war financial model relied on allies having no alternative to the dollar. But what happens when they do? We're about to find out. This $22 billion bond auction isn't just about debt. It's about trust, power, and whether America can continue dictating global economic terms. Japan just said no, and if the world listens, America might find itself in a new reality, one where its approval is no longer required. Washington's attempt to force compliance may have backfired so badly that it ends up creating the very future U.S. strategists have long feared, a world that learns to live and thrive without the dollar. The only question now is, who's next to walk away?